Exercise 3-19. Chef's Catering completed the following selected transactions during May of 2018. And what we're supposed to do, I didn't print out the requirements, sorry. We're supposed to record these as if they were using the cash basis and then record it using the accrual basis. Calculate the net income under either one, and then which one do you think is the most accurate. Okay, so I'm going to set up two columns. I'm going to do one for cash, one for accrual. Okay, remember for cash basis, this is usually what we use on a personal basis. We don't count anything as revenue or expenses unless cash changes hands, and everything is a revenue or an expense. Under the accrual basis, we recognize revenue when we earn it and expenses when they're incurred, and we also record things as assets, and then we deduct them from income as we use them up. All right, so May 1st, we're gonna do like the cash side first, and then we'll do the accrual side. So May 1st, I prepaid rent for 3 months, okay? Under the cash basis, that whole entire thing is gonna be an expense. All we're recording on this is just revenue and expenses. That's all we're gonna do. So this whole entire thing is gonna be an expense for $2,400, and I'm putting it in brackets because I'm going to subtract it later. All right, on May the 5th, I received and paid the electricity bill. All right, so I received and paid it. So for cash purposes, since I paid it, that is also an expense. On May the 9th, I received cash for meals served to customers. All right, so since I got the cash, I'm actually going to record that as revenue. I think that's a 26. On the 14th, I paid cash for kitchen equipment. All right, under the cash basis, the whole thing is going to come out as an expense. All right, on the 23rd, I served a banquet on account. Since it was on account, I didn't actually get any cash, I'm not going to have anything under the cash basis. And then all these entries on the 31st, these are all adjusting entries, and I don't do adjusting entries on the cash basis. So these are all zeros. Okay, so then add or subtract these. And we end up with 2,600 minus 2,400 minus 700 minus 3,000. We end up with negative 3,500 as our net income. All right, on the accrual basis, when I prepay the rent, that's not an expense at all. It's an asset, and I don't record it as an expense until I use it up. All right, I received and paid the electricity bill. I had incurred that electricity, so that comes out as an expense. I received cash for the meals to customers. That is revenue. I actually performed the service. Paid cash for kitchen equipment. All right, that is recorded as an asset, and then I depreciate it as I use it up. I served a banquet on account. I earned some revenue, so I'm going to record the $2,800 of revenue that I earned. All right, I made an adjusting entry for rent. All right, that was this $2,400 up here. It was $2,400 over 3 months. So my rent is $800 a month. So I'm going to show $800 for the 1 month's worth of rent. I accrued salary expenses $1,600. All right, people worked. I owe them $1,600. So I'm going to have $1,600 expense, and I'm depreciating the kitchen equipment for $50. So I've got $50 coming out there. So 2,600 plus 2,800 minus 700 minus 800 minus 1,600 minus 50. So 2,250. All right, so notice that under the accrual basis, the revenue, the net income is quite a bit higher, and it's because I recognize the revenue that I earned, so I have this extra $2,800 that I earned. I haven't received it yet, but I want to know what I earned. All right, and then for the expenses, I didn't subtract out the whole $5,400 like we did on this side. I only subtracted out expenses related to the current month. So that's why the difference is. Under generally accepted accounting principles, we will be using accrual accounting as we do our journal entries and prepare our financial statements.